Welcome to the Nickels and Dimes Finding Financial Freedom podcast. I'm your host, Natalie Kime, and I look forward each and every week to bringing you amazing content that will provide you with a financial education, will support you on your financial journey, and most importantly, help you to find financial freedom. I hope you enjoy today's episode. Welcome to the Nickels and Dimes Finding Financial Freedom podcast. I'm your host, Natalie Kime, and today we're diving into a crucial topic that often goes overlooked in personal finance, and that topic is life insurance. If you didn't know, September is Life Insurance Awareness Month. And so if you follow me, you've seen a lot of things I've been posting about that. And what I run into a lot when I'm talking to people is their misconceptions about life insurance, that they don't need it yet. They're young. Well, I'm concerned about the cost. All of those things. But the truth is, what I usually find out is that there is a lack of understanding of all that life insurance can provide. And I usually have the conversation about, our life on this earth is not guaranteed. Tomorrow is not promised. We never know when something could happen that could take us away from our loved ones or could take one of our loved ones away from us. And if we're not adequately prepared, we end up shouldering a lot of additional financial burden. And so it was important to me to take time in this being Life Insurance Awareness Month to do an episode where I deep dive a little bit more, not only into what life insurance is, but all that it can provide and all that it can prevent. So I want to start out by talking about specifically, what is life insurance? It's a contract between you and an insurance company that in exchange for a premium you pay each month, they're going to provide a specific set death benefit to your beneficiaries, whoever that is, whether it's family, friends, whatever. They're going to provide that to them when you pass away. But it's not just as simple as buying a policy, because life insurance comes in a lot of different forms. And life insurance is really tailored to meet different needs today. If you look back 30, 40 years ago, life insurance was very different. It covered your life if you died too soon. But today, life insurance not only covers you if you die too soon, it covers you if you live too long, which in my opinion is just as, honestly, probably more important than it covering your life if you die too soon. Because so many of us are going to face some kind of chronic, critical, even terminal illness along the way. And we don't know what that's going to be. We don't know when it's going to happen. And so being prepared with life insurance can cover you in both of those scenarios. A lot of us are going to live a long, wonderful life. Some of us are going to pass before we thought we would or before we wanted to. There's so much about our lives we can't control, but life insurance isn't one of those things. So I want to start by breaking down the two main types of life insurance. You have term life insurance and permanent life insurance. So let's dig a little bit into term life insurance. This is the simplest and most affordable option for many people. And I do use term insurance with my clients where it makes sense, whether it's based on their budget, based on specific needs at a time in their life, meaning that a lot of times earlier in life, maybe in our mid 20s, mid 30s, we get a mortgage, we have a family, and so we have a lot of financial responsibilities on our shoulders at that time. Term insurance can be a great way to fill a gap while your children are growing up, while you have a mortgage, so that if something happens to you, the proceeds of that can ensure that your house can be paid off, or the house payments can just be made from part of those proceeds, that your family and loved ones can continue living the life that you would want them to in your absence. And so term insurance is usually 10, 20, or 30 years. I do work with a lot of policies that also do 5-year, 15-year, and 25-year, in addition to the 10, 20, and 30. So really, it's just when you're talking to a life insurance professional, finding out what all the options are that are available on timeframes and figuring out which one makes the most sense for you and your situation. Again, tailor making those plans to fit you and your family's needs. Again, if something happens to you, your beneficiaries receive that lump sum payment, which is known as a death benefit. Now, in addition to the length of a life insurance contract, you have to think about the amount. So, the standard calculation for the life insurance amount you should have is 10 times your annual salary. That's just a simple clear cut. So if you make $100,000 a year, 10 times 100,000 is a million. You should have $1 million life insurance policy in place. Again, though, you need to be working with somebody who specializes in understanding your circumstances to make sure that that's enough and also that it's not too much. If you're in your early 20s, you want life insurance because you bought your first home, maybe you bought a condo, something, but you're not married, you don't have kids yet. Maybe you don't need a full $1 million on your $100,000 salary. But also, maybe you want to get that because you're also newly married and you plan on having a family. Keeping the costs low by starting young with a life insurance policy can really be financially beneficial and financially responsible. So again, it's having those conversations to look at, where are you today? What responsibilities do you have in place? What do you want to plan for in the future? And your budget plays into it too. Now, if you're starting in your 20s with a term policy, you're going to be able to get a significant amount of coverage for a very low monthly premium. That's where it may make sense to go ahead and put some things in place, even if you're not married, you don't have the family yet or whatever, but your financial professional can help you determine that. Once you get into your 30s, you can still get really, really affordable term life insurance policies in your 30s, even into your 40s. The cost for life insurance really starts to incrementally tick up year after year once you cross age 50. It doesn't mean it's completely unaffordable, but the cost is going to start climbing more significantly at age 50. So, something to think about. But look, at the end of the day, like I said, tomorrow isn't promised for any of us. So, being prepared so that your loved ones can live the way that you would want is important. I have clients who get life insurance policies so that they can pass on to causes that are important to them. Church, their religion, they want to be able to make donations there if something happens to them. So it's really based around your goals, your life, what your priorities are, and the places that you want to be able to leave a legacy when you're no longer here. So it's not always a family. And there are a lot of people who get term policies to cover if they're a business owner, to cover either keeping the company going, maintaining the company until it's sold, or covering any expenses that the company may have. When you're a business owner, an entrepreneur, making sure that's covered and doesn't become an additional burden to your loved ones is also really important to a lot of people. So, the pros with a term policy, again, they tend to have lower premiums than a permanent insurance policy does. You're paying for just straight insurance. I am paying for 30 years, $30 a month for $300,000 death benefit insurance. It's very straightforward, very simple, which is the second pro. You're only paying for that insurance. There's no investment options that are tied to that. And then flexibility, the ability to choose the length of that term can help it fit within your budget, and cover financial responsibilities that you have, paying for a mortgage, paying for children's education, things like that. The other thing that's really cool is the add-ons that life insurance has available today. Like I said before, you have the ability to not only protect your life if you die too soon, but if you live too long. And the term policies that I work with provide a lot of additional benefits. I'm going to talk a little bit more about them later in this episode, but terminal illness, chronic illness, critical injury or critical illness. One company I work with even has an Alzheimer's rider. On term insurance policies, adding these things are often included in the cost where they don't make your policy multiple times more expensive. And so it's important to have those full conversations and think about how can my policy also provide for me if I, was in an accident that left me unable to work, or facing a cancer diagnosis, unable to work, expensive medical bills, things like that. Those protections can be built inside of all your life insurance policies, including term life. So that's why I'm going to take some time to talk a little bit more about it as this episode goes on. Now, the cons of term life insurance, there's no cash value. So there's no savings or investment component. If you outlive the term, the policy expires. So it's like renting an apartment versus buying a house. You have that policy for a specific period of time as long as you make your payment every month. So when you rent an apartment, it's for 12 months or maybe 18 months or 2 years, and this is the amount you pay every month to be able to live there. Term policy works the same way. So whatever that premium is for that period of time, that's what you're going to pay. At the end of that time frame, that policy is gone. There's no cash value in it. But if it's structured correctly, it's served its purpose at that point. So it's important to think about that in the conversation you're having when you're tailor making your life insurance plan with your financial professional. So now let's talk about permanent life insurance. This life insurance lasts for your entire lifetime as long as you keep paying the premiums. So it's similar to term insurance in that you have a premium to pay every month. The difference is, though, as long as you pay that every month, you have that policy in place. There is no end date or time frame that policy goes away. It lasts your entire life. And then it will pay out that death benefit when you're no longer here. So there's different types of permanent policies. There's whole life, universal life, and variable life insurance. So again, it's having the conversation to understand how each one of these works and fits into your specific goals, your specific financial plan. Those conversations are imperative. I see all the time. I even hear on the radio different life insurance policies advertised, see commercials on the TV. You could call that phone number and get a policy, yes. But do you know if it's with a top-rated company? Do you know if it's actually serving you beyond just the straight death benefit? Do you know if it fits your financial plan and covers enough? If it's enough to cover the needs that you have. So all of those things, regardless of the type of life insurance that you decide to utilize or to put in place for yourself or your family members, you need to know those things. So having a professional that specializes in life insurance is really important from that perspective. So whole life insurance, it offers that guaranteed death benefit and some cash value growth at a fixed rate. So definitely an opportunity to have that lifetime death benefit, potentially have some of those additional add-ons to protect your health, and have some cash value growing inside of it at a fixed rate of return. Universal life insurance provides more flexibility in your premium payments and death benefits. So universal life insurance has a cash value tied to current interest rates. But the other really cool thing about universal life insurance is that cash you're building inside those policies is protected from losses. It's protected from losses. It's protected from creditors. It's protected from the IRS. And in most states, many states, I should say, I don't know the exact count, but the majority of states, you are protected if you go through a divorce, that your spouse cannot come up after that cash value either, because it's built within a life insurance policy that is protecting your specific life. So there's a lot of flexibility. Universal life insurance also can be very inexpensive. Excuse me. It can be very inexpensive especially when you start young. Look, anything you're doing financial wise, the sooner you start, the better off you are, especially when there's a saving component in it. Time is your friend when it comes to your finances. So you can start with a premium payment that fits within your budget today, but as your career grows, as your business grows, as you have the ability to put more money into that, you can adjust those premium payments according to the structure of how your policy was built to push more cash value in there and grow that cash value for you in the future. So, when you build that policy with your financial professional, they will go over all those components and let you know. For example, you're starting with $250 a month, Sally, and you have the ability to put up to $1,000 a month into this policy the way we've built it. So, in 5 years, Sally, if your financial situation has changed and you want to increase what you're putting into this policy above the $250 a month, all the way up to 1,000, all we have to do is let the insurance company know, fill out some quick paperwork, and you can start putting 500, 750, or even maxing out the policy to build more cash over time. So this episode isn't solely about universal life insurance, but there's a lot of things that come into play with that. Universal life insurance policies are often called the Swiss Army knife of financial services because they offer protection if you die. They offer protection if you live too long. They offer cash value accumulation. They offer protection against losses, and that cash value accumulation is growing tax free. The other thing is universal life insurance policies. That is the only savings vehicle that you have access to before 59 and a half from an investment perspective, before 59 and a half to access your money without taxes and penalties. So it is a significantly used tool in the financial industry for people who are planning to retire early. If you have other investment products that you can't touch until 59 and a half, but you want to retire at 50, you can utilize a universal life insurance policy to build that cash value that you'll live off between 50 and 60 years old when you can tap into your other financial savings products, you've that wealth that you've created. So a lot of really great things come along with universal life insurance. That's why it's called the Swiss Army knife. Then you also have variable life insurance. So this allows policyholders to invest the cash value in various investment options like stocks or bonds. However, this means both risk and reward are involved. So where the universal life insurance product allows you to grow cash with no losses, the variable life insurance product, you can grow cash in it, you can invest that cash, but you do have the risk of losses based on what you invest your money in, based on what's going on in the market at that time. So, risk and reward in that variable life insurance products. Again, something to go over with your financial professional and make sure you understand how each of these types of life insurance work, which ones make sense for your financial plan and would meet your needs the best. So, what are the pros of permanent insurance? Well, you have the lifetime coverage. Your beneficiaries will receive a payout whenever you pass away, as long as you're paying that premium every month and your policy's active. They offer cash value growth. So, they build cash value you can borrow against and use within your financial plan. And they also have tax benefits. Death benefits are generally tax free in these products, and the cash value grows tax deferred or even taxed never, depending on the type of product you use and if that product is built correctly. So, something definitely you need an expert to help you with to make sure that that plan is built not only according to your needs, but that you fully understand how it works and how it fits your overall plan. So, what are the cons? The cons of permanent life insurance: higher premiums. Permanent policies are more expensive than term policies. That difference between the cost of term and perm is obviously going to be larger the later in life you look at putting a policy in place. So again, back to that idea that the sooner you start, the less expensive it is to cover yourself and the more time you have for your money in these products to grow. Because again, time is the best friend you can have when it comes to your finances. These policies can be complex. So they have investment options and other features that are easily confusing to somebody that doesn't understand exactly how the policy works. And that's why the education around these products is so important. Make sure that when you're sitting down with a financial professional like myself, that education is a significant part of the process that you go through. It is important for you to know how these products work, what you can and can't do with them, when they will or won't come into or pay out, if you run into health issues along the way, if they have components that you can utilize while you're still living, all of those things, you need to understand how they work. It is so imperative that you are familiar with your products and how they meet your financial goals long term. So that complexity can often keep people from stepping into those type of products and utilizing them. And you guys, they're some of the best products that exist in the financial industry. So please don't shy away from them. Just get in touch with somebody and have a conversation. And if you need somebody to help guide you through that, please reach out to me. I don't charge you to sit down with me for a consultation and get information on any of the products that might fit your financial plan and your specific financial needs. So please reach out. I'd love to sit down and have a conversation and understand where you're at, what you're looking for, and what's most important to you, and give you some guidance in that area. The other thing is sometimes some of these plans you have lower returns on. So that cash value can be more modest. Again, it depends on which of these permanent plans you pick and how they are structured. So, depending on what you're looking for, what needs you have, what else you already have within your financial plan, your financial professional will walk you through. If you're using a whole life, what kind of returns can you expect from that? They're likely to be more modest than that in a universal life product, an index life product, and a variable life product. Making sure that you understand that in a variable product, you have exposure to losses, but in an indexed universal life product, you have protection from losses. So, all of those things and the kind of returns that you can expect need to be fully explained to you. But these products do offer some really great returns comparative to the market if they're structured right and if they're put in the right places. So, those conversations, I would not step into permanent insurance without having a conversation with somebody that understands all the different types of life insurance, all of their components and their pros and cons. That is somebody who's going to be able to guide you, answer your questions, and make sure that you clearly know how the product you're paying for benefits you. So I'm going to reiterate that all the time. Those conversations are so important. Now I want to shift into what we call riders. So customizing your policy to the health needs you could potentially have in the future. We don't know today what's going to happen, but being prepared for that is so important. So these are the components of your policies that cover you if you live too long. Your life insurance is going to pay if you die too soon. But these components will pay if you live too long and you suffer chronic, critical, terminal illness issues along the way. So they're called riders, and these are just additional features or benefits that can be added to your life insurance policy for an extra cost. Now, I work with a lot of companies that these are included in the cost for a term policy. It quotes you your amount with those riders. And so they are built into the policies instead of being onesie twosie add-ons for a certain amount of money. These are, in my opinion, imperative imperative imperative. There we go. We can say it, imperative to look at and think about your family history, think about your current health, think about your current family structure and what you think is important to have added on to these policies for you. So some of the riders that can be included or added. Now, all of my policies that I sell that include living benefits do not necessarily have every rider I'm about to go over. So again, a conversation to understand what's included, what can be added on, and what can't. Now, every carrier has a suite of products. So let's talk about, let's say it's Nationwide Insurance. They have a suite of term insurance products, index products, variable products, right? So different carriers will offer different kind of products for different markets of people. And within those, there's different kinds of riders you can add. Not every rider can you add to every policy. So again, to understand, sit down with somebody so they can see your full picture. And when I get all the information from a client, I know what their dreams and goals are. I know what their health is. I know what their family dynamic and makeup is. I can then go to the providers I know that offer the things that are going to best fit that client's scenario. And from there, I can tailor make their plan for them. So, again, those conversations are important. And there are so many people out there who have those conversations at no cost, like myself, with their clients. So, if you have questions, raise your hand. There's no bad question. No bad question. Again, I've said a million times before, we don't get a firm financial education going through our school systems. Most of us don't get that in our homes. We're learning from the school of hard knocks. So just have conversations. There's not a bad question. If you don't understand something, I would rather explain a product or a component of financial services to a client multiple times over to know that they understand how that's going to impact them directly than have somebody come and say, I just need life insurance. I don't care about the details. Here's how much money I have. Just put it somewhere. I'm not going to do that. I'm still going to have them sit down and have the conversation because my job is to make sure that you understand the product I put in place for you. Because if you don't, there's a good chance you maybe won't see the importance of it. And when money gets tight, you let your life insurance lapse. And then what if something happens? There's nothing in place. So all those things are important. So let's jump into some of the different riders that are available out there. This is not a fully comprehensive list, but just to give you an idea. So there's an accelerated death benefit rider. This would allow you to access a death benefit if you're diagnosed with terminal illness. It can help cover the medical expenses, um, um, living expenses, and things like that. So, a terminal illness rider or an accelerated death benefit rider that pays out if you're diagnosed with, let's say, cancer and you're given 6 months to live. There is a portion of your death benefit you will have access to during that time to utilize. Then there's a waiver of premium rider. This waives your premium payments if you become disabled and can no longer work. So, a great benefit for somebody who maybe is disabled along the way to the point they cannot work. And this would waive your monthly premiums and keep your policy in force. So, depending on what you do for a living, you know what your concern is there. Another rider you could add on to protect you in case that were to happen. There's also accidental death benefit riders. So these provide an additional payout if you die due to an accident. I think that one's pretty straightforward, accidental death. So additional payout if you die due to an accident. There's also critical illness riders that would give you access to a portion of your death benefit while you're still living facing a critical illness. So again, let's say cancer, but you're not necessarily given a diagnosis of you have 6 months to live. But you may be going through a cancer battle for a year, 2 years, 5 years, right? That that rider would give you access to those funds as well to help cover, you know, living expenses, medical expenses, care that you may need along the way. And then we have chronic illnesses. So if you have a chronic illness, you're unable to do 2 of the 6 daily activities, like feeding yourself, dressing yourself, bathing yourself, toileting, things like that. You would qualify for that chronic illness rider to go into place, give you access to your death benefits to cover having someone come in to help you with those things. Um, Likely unable to work in a chronic illness situation. So you would have access to those funds to help cover your living expenses and things like that as well. You have child term riders that you can add. So this is a really affordable way that you could put a small death benefit in place for your children if they were to pass away before a certain age. So you can build that within your policy, or you could get a policy for your children as well. So a lot of people look at, why would I need a policy on my child? Y'all, if you get on social media at all in any given week, you likely see things happening to younger adults, younger kids, even very small children that are beyond our control. Accidents happen. Health issues happen for those young kids. I always recommend to my clients that they put a policy in place on their children as soon as possible after they're born, which is usually about 14 days. They need to have a social security number issued. But you can put types of policies in place, standalone policies for your children that give you the ability to save cash within them and save for college, save for weddings, save for whatever you want to do for your children. You can tie to that death benefit or that life insurance product as well. But there are times that maybe due to budget or whatever, a client prefers to add a child rider to their own policy. So maybe they add a child rider for $50,000 to their $1 million policy on themselves. And at a very small cost, you now have a life insurance in place, a death benefit in place if something should happen to your children. However, those riders are not going to allow them to tap into your death benefit or your living benefits if something happens to them, where a standalone policy for a child would. They could get their own living benefits with the right carriers. Not all carriers offer those for children, but there are some great ones that do. So, again, another thing to think about. And you also don't know, if your child gets diagnosed with a chronic illness or a terminal or critical illness in childhood, um, you can't get life insurance at that point. So having it in place, whether small, means you have access to those different things should the unforeseen happen. Okay. And then the last one I'm going to touch on is a guaranteed insurability rider. So this allows you to increase your coverage without having to take a medical exam at a later time. So you can pay an additional amount to add that rider. Say you start out with a policy in your 20s and you just you're making, $50,000 a year. You don't have a mortgage yet. You're not married and don't have kids, or maybe you have a mortgage, but not a family yet. So you just get a $250,000 policy to cover you initially. But then you do get married and you do have children, and now you have a bigger mortgage on a bigger house or something. So that guaranteed insurability rider would allow you to increase the death benefit to where you need it to be based on life changes. But you wouldn't have to go through medical qualification to do that. You paid an extra amount to have guaranteed insurability in the future. So it's going to be based on your health when you got that policy initially, not 10, 15, 20 years down the road when maybe you faced some health issues yourself that would make you either not qualify for life insurance or possibly make the expense of life insurance significantly increase. So another great rider to look at in the right situation. So what are the pros of adding riders to your life insurance policies? Well, they allow you to tailor that policy to fit your specific needs, to individualize that policy and have it cover exactly what's important to you, which might be different than your next door neighbor, your brother, your aunt, your uncle, your parents, or whatever. You really can tailor make those policies to fit your personal needs. The other pro is offering additional protection. They add value and more comprehensive coverage. So, that disability, long term care coverage, I didn't really touch on those two, but those two are great riders that can be added on as well. If you become disabled, I talked a little bit about that, but you can access your death benefit while you're still alive if you become disabled. But long term care, especially, is so important. That's really in alignment with kind of the chronic illness where I talked about you can't do two of those six daily activities of feeding yourself, dressing, toileting, showering, whatever that is. And so that long-term care coverage is what it's called on some policies. You have the ability to tap into your death benefit while you're still living to cover that care that you would need. And that's one I've talked about before in previous episodes where I'm telling my mom's story. If my parents had known that was available, if I'd known what I know now 20 years ago to have helped put my parents in policies that had some of these riders, the situation would be very different for my mom as far as the ability for us to tap into death benefits to cover expenses. And again, for my parents, they did enough right things saving and staying in their cute little house I grew up in rather than upgrading, that it put him in a strong financial position where been able to set money aside to cover those costs as well. But if we had that additional protection in place, we wouldn't have to dip into, their retirement money to cover those things. It would be something in addition to that we'd have in place. So, definitely good things to consider having in place and helping customize your policies based on your needs. So, what are the cons? Again, adding riders to your policy can raise your premiums. Sometimes they're included in the base cost at very affordable rates. Excuse me. I'll give you an example for me. I have a life insurance policy that includes long term care, and my premium for that was the same with or without it. It was a built-in add-on with that insurance company. Some of the other ones, you may have some that are built in and others that are available to add, but when you add, there's an additional cost for those. So definitely talk through all of those components, those individual costs when you're tailor making that policy for yourself, so you understand what's coming in the overall premium you pay and what's going to increase the premium. They can also be a little bit complex, hard to understand. So, again, a specialist in those areas is important to be working with that can help make sure you understand what you're putting in place and what it does and doesn't do. Because there are some restrictions and qualifications that can come along, excuse me, can come along with those riders that you want to add. So now I want to shift into life insurance costs. It's one of the top things that I hear about why people don't have life insurance. It costs too much. Most people who answer that, if they answer that, that tells me they've never had a full conversation about what's available when it comes to life insurance. So I want to dig in to kind of some of the components that play into the cost of life insurance. So the first one, age. I talk about that all the time. I mentioned it a couple times today already. The younger you are when you buy the policy, the cheaper, less expensive it typically is. So whether you get term, or permanent insurance. That's going to be the case. Your health. What is your medical history? What's your current health condition? That plays a huge role into the cost of life insurance. Smokers or those with pre existing conditions may pay higher premiums. Well, not may, they just do pay higher premiums. So if you already have some things on the table that raise the risk for the life insurance company to have to pay out those benefits, your cost is going to go up. Now, that doesn't mean that that cost is not still affordable, but something you need to realize and take into consideration when you're looking at this. The amount of coverage. So the amount of the death benefit that you want in place in your policy impacts the cost of your policy. A higher death benefit means a higher premium. So again, look at all those components. When I quote life insurance for my clients, whether it's term or permanent, I show them the change in cost based on the death benefit amount of the policy so that they can see what that looks like and make sure that they put the right amount in place for the right amount of time at a cost that fits within their budget. You can always, if you're healthy, add on additional life insurance in the future. Okay. So now, again, we don't know what's going to happen. So we don't know if in 10 years we are going to be healthy and qualify. Again, all conversations to have with your financial professional to make sure you're structuring what makes the most sense at different times in your life. And then you're building on that as time goes by within your financial plan. So the policy type, a term life insurance is going to be cheaper than a permanent life insurance. We've already touched on that. And then the riders, as I just mentioned in the previous section, they're going to increase the cost if they are true add-on riders and not riders that are included in the structure of the policy already. So important to understand all those things, touch on each of those things as you're having a conversation with your financial professional to make sure you have the right things in place specific to yourself or your family. To get the best price, it's important to compare quotes and consider what your needs are now as well as in the future. Again, like I said, I always show different life insurance options, explain how each of them work, and then show based on different face amounts or death benefit. Here's what the cost breakdown looks like so that my clients have a full picture of all the options that are available. I say all the time, my job is not to sell you a product, it's to give you options, to make sure you understand how those options work and how they fit your needs so that you can make a decision and let me know what you want to put in place. So again, the importance of having that conversation and understanding everything that's on the table, all of the options that you have. I want to touch for just a couple of minutes here on final expense insurance. It's an insurance that a lot of people never think about. I I just thought of life insurance. Life insurance is life insurance. When I die, it pays out. My family has the money they need to take care of anything they need to take care of, including my burial. Well, here's the thing you need to know. The typical life insurance policy takes 3 to 6 months to pay out after somebody passes away. You've got to provide a death certificate. If there's any question or anything like that about, the way that they died, that can delay things. If there's questions about, like they've got to scrub through that plan and make sure that there aren't any limitations to your plan, that there aren't any concerns. They've just got to make sure they go through everything on the insurance company side. They cross all their T's and dot all their I's in paying out this death benefit. That process takes time. Even if there are no questions, that process takes time. So final expense policies are a type of whole life insurance designed specifically to cover funeral costs and other end of life expenses, such as medical bills or debts that may be left behind. So these policies typically offer a smaller death benefit ranging from $5,000 to $25,000. I actually work with some companies that go up to, I think, $50,000 and even $100,000 you could get. And oftentimes these are marketed to seniors. However, getting any kind of life insurance as a senior later in life is going to be very expensive. I already have a final expense policy in place for myself. I'm 52, and there is one in place for my son who is 23. So you can get these policies younger in life at a very affordable cost so that if something happens, if something were to happen to me, my son would make one phone call and let them know that I had passed away. And within 48 hours, that $50,000 coverage, that's what mine is, that $50,000 coverage I put in place within 48 hours would be transferred to my son's bank account because he's my beneficiary. Therefore, he would be able to pay for all funeral costs and things like that. But let me tell you something else. Excuse me, my allergies are crazy. Anyway, let me tell you something else. Is that A lot of these final expense policies, the companies also offer a final expense concierge, somebody that I can call while I'm still alive and tell them, this is the funeral home I want to work with. This is where I want to be buried. I want to be cremated instead of being buried. This is the kind of casket. These are the kind of flowers. This is the kind of funeral. And literally have all those decisions made so that not only when my son calls to let them know I've passed, does the money transfer within 48 hours to his account, but they step in and help coordinate everything for my funeral because I prearranged it. So he not only does not have to carry the weight of the financial burden, he doesn't have to carry the weight of what would I want, and he can be surrounded by loved ones supporting him through a very difficult time and focus on that. And that's very important to me. So some really inexpensive final expense insurance you can put in place. Final expense insurance, even for seniors, is likely going to be cheaper because it's a smaller amount than a full death benefit or a full life insurance policy. But definitely something to look at to fill in that gap because look, there's a lot of people out there that don't have life insurance. And when they pass away, you see the GoFundMe's. But it's not just the people who have no life insurance at all that start GoFundMe's. It's people who have life insurance but are waiting for it to pay out. And so in the meantime, they don't have the money saved already to be able to utilize to cover a funeral. And so they need 10, 15, $20,000 to make that happen. You can cover that through a final expense policy. So what are the pros? The death benefit's smaller, so they're more affordable. Those premiums are going to be generally lower than those of a traditional whole life policy or just an overall life insurance policy for a higher death benefit amount. They usually have simplified underwriting as well. So these policies are usually easier to qualify for from a health perspective, fewer or even no medical exams. And look, you guys, in general, when it comes to life insurance right now, there are policies that within certain parameters, they waive medical. If your medical records tell them the things they need to know without raising red flags, that process can be a lot less tedious than it used to be. So just in general, but these do have more simplified underwriting and they're for a specific purpose. So it's providing that peace of mind, knowing your loved ones won't have to cover your final expenses out of pocket. So affordability, simplified underwriting, and a specific purpose are the big pros of those final expense policies. The cons, limited coverage. So the lower death benefit means it may only cover funeral expenses and not leave a lot for anything else that might need to be taken care of. Now, while the premiums are lower because the death or the benefit amount is lower, the higher cost per dollar of coverage exists with these. So final expense policies tend to have a higher cost per dollar of coverage than a traditional life insurance policy. However, mine is very affordable. Like I said, I have $50,000 and I pay, I don't know exactly, it's not right in front of me, but I think I pay around $40 a month for that. So something that's still, very, very affordable for me to have in place and just gives me the peace of mind that my son wouldn't have to worry about that. So hopefully today I've given you a lot of things. Number one, educated you on the different types of life insurance and all that can be included in them, the pros and the cons of each one. That's always important to me that people have all the information they need to make a decision. And I have not given you enough information today to help you make probably the final decision on what exactly is the right thing for you. But what I hope I've done is with the information I've provided today, I've given you enough information to feel like you could come to the table and have a conversation to make sure if you don't have life insurance, that you can put some in place and that you understand in general how the different types of life insurance work so that you could have a conversation and get a plan tailor-made for you, or that you could come to the table and have a conversation about, do I have enough life insurance in place? Do I need to consider adding something else? And work with somebody to, again, round out your overall portfolio and make sure you have exactly what you need. Because look, 10 years ago, my responsibilities financially were very different than they are today. And so it is important to audit your life insurance products and make sure that they still fully meet the needs of yourself and your family. I want you to realize life insurance isn't just a financial product. It's a tool for protecting the people you care about. We put insurance on our phones. So if we drop them in the toilet, we pay $100 and get a new phone. I don't know. I think the last time I upgraded my phone and made sure the insurance was on there, I'm paying about $15 a month. I recently put a term policy in place for my son to add some additional coverage to what he already had in place. That was $20 a month. He's 23. It was a $500,000 term policy for $20 a month, $5 more than it costs to insure my cell phone. We have insurance on our cars. Now, yeah, we might be required to do so. But financially, I have wrecked a car and the car I hit when I didn't have car insurance. I did not know I didn't have car insurance, but I didn't. That is a huge financial burden, a huge financial burden. So we're putting coverage in place in these other areas of our lives that could impact our finances, but we're not putting it in place on our lives that could have the biggest financial impact to the people we love that exists. So you guys, please, please, at least sit down and have a full conversation with somebody about whether or not you need life insurance and what type makes the most sense for you. Because whether you're considering a simple term policy, exploring permanent insurance, adding riders for extra coverage, there's a life insurance plan that can fit your needs and, most importantly, your budget. The key is understanding what type of policy works best for your situation, whether it's covering a mortgage, leaving a legacy, ensuring funeral costs don't come out of your family's pockets and become a burden. Just take time to review your options and speak to a financial professional. It's worth the peace of mind to know that you've secured your family's financial future. So, again, I hope that I gave you some added information that maybe you didn't have, and that I prodded you to sit down and have a conversation to make sure that, one, you have life insurance in place, two, you have enough life insurance in place, and three, you understand how it works. If you need any help, please go to the link for this episode and send a message to the show. I would love to have a conversation with you, help you wherever I might be able to. But thank you guys for tuning in. I hope you enjoyed this episode. Please, please give me a review. Give me some feedback on what you're enjoying, what else you'd like to see in the podcast. I want to make sure that the information I'm putting out for my audience is what my audience is looking for. So I appreciate those of you who have already done that in the past. But if you have the time, please give me some feedback. I really appreciate it. I'm your host, Natalie Kime, and I look forward to continuing to bring you amazing content each week that will educate you, support you, and most importantly, help you to find financial freedom. I look forward to our future episodes together, having you listen in and learn. And until then, take care and stay safe.